We are back to some optimism. This is almost getting ridiculous. We are back to some optimism about what's going on with the war in Iran and the Strait of Hormuz. You know, I thought it was such breaking news the first time we talked about the Strait of Hormuz and how it was a choke point for oil. And now, like, all we hear about is the Strait of Hormuz. It's getting old, but nonetheless, it is definitely been a factor. And every time we get word that, you know, peace talks are back on, or we're going to open the strait back up, you know, interest rates get better a little bit for a period of time. And that's what's going on this week. So I just want to give you a couple updates and maybe a little forecast on what's, you know, going to happen towards the end of this week with the jobs numbers. We get a little peek at it here with the JOLTS report that already came out. I'm recording this on Tuesday. It's coming out on Friday. You'll know the results of the BLS job report, so I'm not trying to claim that this has all the answers, and I don't know that it really matters that much, but I want to talk a little bit bigger picture. So as of today, U.S. Treasuries, they're improved today, 4.64. Not a great number. We'd definitely love that to be lower, but if you're watching the MBS market, what you've seen is yesterday, Monday, we had a decent day. We were up, 19 basis points, another 31 today. So that puts us up 50 basis points in the last 2 days. I mean, that's good. We'll take that. And I think Monday, what was driving that was just the word that there are further talks between the U.S. and Iran and the opening of the strait. And then today, on Tuesday, that was even more emphasized by Scott Bessent, the Treasury Secretary, who was speaking this morning and said that the strait, could be open as soon as today or tomorrow, so Tuesday or Wednesday. As a result, we're seeing, a good week so far for mortgage-backed securities, and we need that. We need the relief. I'm going to talk next week about strategies that loan officers are using to win in this market despite the challenging interest rate environment. But let's be honest, like, lower interest rates would definitely make it easier. So it looks like we have a glimmer of hope that that's starting to happen. As a result, oil prices dipped down to $76 a barrel again today. So one thing that Scott Bessent did say is that he thinks that oil prices could continue to even go lower than that due to the pent-up inventory that's just sitting over there, waiting to go through the Strait of Hormuz, that, we have essentially inventory stacked up on these ships. And that and other factors could lead to even lower oil prices. And as I've talked about ad nauseum on this podcast, what I see happen is that when we see overall oil prices lower, eventually interest rates catch up with that. Not directly related, but they do tend to head in the same direction. And that's primarily driven by the inflation, right?